What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is January 16th of 2019. Well, folks, I hope you all are having a great day wherever you are, and today we've got a wide variety of different topics to discuss in regards to the update for crypto markets. I not only want to spend some time talking about Binance's new exchange platform that is tackling the EU market, but along with that, I want to spend a decent amount of time going over a new index that was created by LedgerX that measures volatility, very similar to that of the VIX in traditional equities. And last but not least, we got to go over the importance of censorship resistance and why cryptocurrency brings such a revolutionary trait to the way we do commerce. And outside of that as well, we'll be going over traditional equities and spending some time going over volatility and overall price points that I'm currently watching. So we've got lots of things to discuss. Let's not push it off any longer and dive right into the update. So outside of the past 24 hours of price action, which has been relatively neutral, we have a decent amount of players in the green with a few in the red. Then again, nothing too seriously confident at the moment for price action outside of a few altcoins. For the most part of the past 7 days, most cryptocurrencies are still in the red. Now, I want to emphasize this, guys. Again, I know a lot of people get caught up in short-term price action, and this is the same for the upside as well. We have nowhere near the confidence we've seen in price to signal an altcoin cycle, to signal a bull cycle. Really, what we've been seeing so far is a very low volume market being manipulated by a few select traders, right? You've seen it in the charts. You've seen the 1 to 2,000 Bitcoin buy or sell orders that just plummet the market down $200 or $300 or prop it up $200 or $300. It's money for people who make money on leveraged exchanges. They're manipulating the spot market, colluding together, and making money on the leveraged exchanges in this case. So it's important to understand this, guys, and not to get too flustered. And again, playing in the case of a bear here in regards to seeing how we've actually broken below the 50-day, we weren't able to hold. One thing that I want to point out too, as much as we've been seeing, I gotta say, Chainlink has actually been like killing it over the past week or so, breaking out of a technical wedge that I charted a while back, but I had still no idea it had broken out of. I'd stopped watching it for a while. But in a lot of these altcoins here, they're not only very low in market cap, but you can see here the volume, though it is good in the short term, we have to deduct a lot of this volume, guys, outside of, I'd say, Chainlink and a few others, because a lot of them are getting trading volume on exchanges that is market makers, that's wash trading, is just truly false volume. And that's not a good thing to see in this market, to already see low enough numbers like this and to think that we have to deduct even further from volume and that they have low market cap, right? So just pointing this out, guys, playing devil's advocate. As much as I love the space long term, we have to think in the short term. Look at those signs, watch the volume, and check where that volume's coming from. If it's not from Binance, if it's not from Coinbase or GDAX, or in some of the more well-vetted exchanges, which I'll actually probably do a video on in the future, just talking about measuring volume and what exchanges have real volume. It's definitely a better bet that the market is still probably quite empty right now. There's not too many people excessively trading crypto. Nonetheless, improvements from, I'd say, over the past 2 years. But again, in the bear market, it's quite expected to see this kind of lack of volume. Anyways, I rambled on enough about that. Going on to market cap here, we can see we're still holding about half the gains from our lows here at 100 billion. Volatility is relatively low in regards to what we can see here on CoinPaprika. And at the moment, again, I'm still betting that, you know, we're going to get a pace of direction here. As we talked about in the last video, it was quite well timing, I think, in that sense, in regards to the break. I actually started, this was 2 videos ago, talking about the breakdown in regards to price. We'll take a look at that in a second with Bitcoin. But again, if we don't pick up some pace here over the next few days, if we don't have something to carry markets forward, as much as I had a target that we'd potentially test towards 5,000, again, we broke down to a lower level. We're starting to push sideways at a slightly downward trend. And if we don't get something to pick up markets here in the next few hours, guys, it's probably going to come back down, and we're going to see cryptocurrencies come back down to 100 billion to double the bottom. And that would actually be quite nice for markets in the sense of the longer term uptrend, right? You usually do tend to see double bottoms or triple bottoms in this case for reversals. But again, I'm not making any wild bets. I'm not making any wild trades. It's so minuscule at these levels in regards to price movements. And outside of that, Bitcoin dominance is still remaining high at this point. But again, making lower highs along the way, an interesting thing to point out here in regards to seeing lower levels of Bitcoin dominance. So if we continue to see this over the next few weeks, possibly over the next month or two, this could provide a catalyst for altcoins to gain some dominance in the market as Bitcoin moves up and as other altcoins follow as well. All right, so I forgot to actually get a trading view window here, so I'll drag this over here, and we'll go ahead and we'll take a look back at the NASDAQ in just a little bit. But going ahead to take a look here at cryptocurrency right now, what I'm watching for, and this is what I wanted to talk about in regards to this kind of sideways trend we're seeing at the moment, as we broke through the 50-day moving average. I'll be honest, I was hoping we would get probably more of a sharper correction downward after the first big day of sell-off. But at the moment, it seems like we're pushing sideways. At the moment, we're pushing below the 50-day. You can see it's obviously acting as we got a breakout above the 50-day, and we held above there. We also saw a breakdown, and now it's pushing sideways. So now that we realize this is really the channel of price that we have to work with at the moment as price is pushing sideways. It's simple support and resistance, guys. No serious complication. Again, I'm not trying to claim this is the all being God TA, guys, or technical analysis. I think some people get really heated up over it. The thing is, though, I'm a naked trader. I don't really use many major indices, and the reason being is that you don't have to overcomplicate it. A lot of the times, big traders are simply watching for support and resistance. And that's why after we broke through the 50-day, you started to get the continued sell-off, right? So the moving averages are a good index. In this case, RSI is pretty good. But at the moment, we're neutral on most things. So in this market, I would tell you guys the reason why I'm not trading is because there's no trend. It's very hard to predict where this market is going to go at the moment. My major thing, more than anything, is that I do believe we are going to see this come retest the lows down here around 3,200 or maybe even down to the big even at 3,000. But at this point, I don't think we're confident in any regard as to where this is going. We got to break above the 50-day, which was a sign of confidence, but we broke right back down. And it seems like this market, if you take a look at the hourly, the picture becomes so clear. I mean, we just have such spotty volume in this market. There's no trading going on in some time periods on Coinbase where 49 Bitcoin can be traded in an entire hour, and then you've got someone coming in with 2,600 Bitcoin able to dump the market and clear through the order book. It's not good. When the majority of the volume that's traded is on BitMEX and leveraged exchanges, it's just not something to try to bet on, right? It's not something to try to trade. So you guys can try and trade in this market, but I'd say that every time I see levels come back down to these lows, right? And I feel that there's enough signs of confidence that the market is ready to bottom, at least in the short term. That's when I enter, right? And even if it's in for a short-term trade, that's the only time I'm going to be making additions to crypto. But I'm waiting more towards a actual trend reversal, something that builds confidence where we get above these moving averages and start to break out towards higher levels and form a much more longer-term uptrend with some catalysts that are carrying it, like it was back in 2017. So anyways, I don't want to spend too much time looking specifically at Ethereum or Ripple or any other altcoins at the moment. As we can see, Bitcoin dominance is holding quite strong. When we start to see that depletion, we'll start to focus on altcoins and start to find some good opportunities in regards to those markets. But right now, nothing's really happening. We're pushing sideways. So I want to go on and talk about some fundamental news here in regards to Binance. Now, Binance, as you all know, has been setting its target on expanding throughout the world. It obviously had a great leg up going into the 2017 rally. It came up out of nowhere as a company. It was probably one of the biggest success stories in the cryptocurrency space and has won over the hearts of a lot of people. And with that, they've expanded into Africa, into all types of different regions of the world, and now they're actually even tackling the EU and more specifically UK traders. Now, it's important to note a few different things here. This is a new crypto fiat exchange or fiat to crypto exchange. So obviously that entices a lot of people. It's an onboarding ramp. And Binance traditionally doesn't do this. They usually just deal, at least on their major exchange that everyone uses, with crypto to crypto transactions. It's usually a secondary exchange you go to. But outside of this, it's important to talk about, where it's based. They're doing this on the island of Jersey, a British self-governing dependency in this case. And outside of this as well, it's really important to talk about, why they picked the location. So I wanted to highlight this here. It says Binance selected Jersey for its highly developed digital infrastructure, robust regulatory framework, and world-class financial services sector. So they picked a prime location. I'll be honest, I think this is partially it, but I honestly think as well it's a matter of proper regulatory approval, making sure they're in a proper place to operate. And this is why Binance has been moving its main operations to Malta, right? So Again, I think more than anything, the first thing Binance and these companies are thinking of is, am I actually originating this company in a place that's got the regulatory approval and isn't going to kick us out next week? But outside of that, again, I congratulate them. Another important thing to note as well is that this is actually not Binance specifically operating this. They further clarify here that Binance Jersey is an independent entity from its parent Binance.com, and in this case is using the same technology. So again, important to note, this isn't really going to be probably headed up by CZ in this case. It's going to be operated by someone else in this case. So nonetheless, interesting stuff. The major thing that they're offering is Bitcoin and Ether pairs that people will be able to trade. So it's good to see that, at least an entry gateway. But I'll be fair, I don't think this is big enough as a catalyst in this case. It's, again, one of the many small steps we're starting to see that are showing that, hey, we're providing institutional gateways or more trading gateways for people to engage in cryptocurrency markets, which nonetheless is great for the crypto space, in my opinion. Anything that can bring more liquidity is good. All right, so I really want to spend some time talking about this because this excited me when I saw it, and it's something that I've been killing for as a YouTuber for a very long time. As you all know, on CoinPaprika, I love the volatility index that's available. It's a decent little gauge in regards to trying to understand volatility. And outside of that, though, there really isn't any good volatility indexes. You can look up, there's I think one you can find on Google. It's a Bitcoin volatility index. Hasn't changed for like 2 years. Same old thing. And because of that, as someone who likes to use volatility in traditional equity markets, I have been thirsty for a new volatility index in the cryptocurrency space. Well, who better to do it than LedgerX? LedgerX, who does crypto derivatives and basically crypto options in this case, has recently launched what they call the Bitcoin Fear Index, or their own volatility index. And as we go through the article here, I talk a little bit about it, and the index for it instead of the VIX is the LXVX. So much like the VIX in traditional markets, usually when we see spikes in the VIX, it usually signals that there's fear or excessive uncertainty in markets. Again, you find sometimes uncertainty as prices moving higher, but it's very, very common to find volatility and uncertainty when markets are going down. That's why they're coining it as the Bitcoin Fear Index. So it's a general gauge that allows us to know when Bitcoin is, Bitcoin markets more specifically, and traders are uncertain about Bitcoin's future. And as you can probably guess, back in January of this year, there was a lot of uncertainty as Bitcoin started to actually January of 2018, about a year ago. So again, very interesting to see this. I've been waiting for this for a very long time. If you actually go to the website here on LedgerX, this is how you actually find it. I was going through so many articles trying to say like, okay, cool, I want to go check out the index. Where is it? And none of them really referred to it. They just basically took me to the home page in this case, or well, I think they took me to another page and stuff that didn't have the index. So I finally found it, just going to their actual page. They have it up here now. And you can see that in this case, this is basically over the past 3 months here, Bitcoin volatility has started to die down and everything over the past few days after we had the rally back. Actually the sell-off we saw in Bitcoin back during back in December of this year. So in this case, again, very interesting to see that they have this new index, and to also kind of explain it as well. I think it's important to have a little bit of a justified understanding around it. Basically, in this case, LedgerX does call and put options in this case, and the volatility index that they offer operates very similar to that of the S&P 500 volatility index, or the VIX. It's important to understand that this has to do with options markets, or derivatives in this case, because the volatility index in the S&P 500 is not just measuring volatility in the S&P 500, it's the volatility within the options market, right? Options that are being traded on the S&P 500. And each index has very specific measurements. But generally speaking, this is how the LXVX index is being measured in this case, this crypto volatility index. As you can see, options are being traded at the moment. People are having different bids and asks being traded on these financial products. And LXVX also operates very similarly in the sense that it's off of implied volatility. Now, there's a difference between realized and implied. Realized has been already realized in previous price action in regards to volatility, but the implied volatility is determined heavily on traders, right? So we're trying to get a gauge of where traders are feeling the future for crypto is going to be. We can see here a good example they listed is that if an expected ETF decision is coming out, realized volatility would not capture the uncertainty, right? Because that price action was already finite. So the index is going to, in this case, be looking for what the market is thinking ahead of the game, right? What they're thinking of in the future. You know, are we expecting a wider range of price in this case? That's really what determines volatility. And in a certain period of time, are we expecting more uncertainty, valuations fluctuating in this case? So very important thing to take away. But you guys can read through the extra details here. They talk a little bit about it, some of the underlying data in regards to making sure that they don't have crazy spikes in the VIX in this case. And or I keep on using the VIX as a means of volatility, and you get what I mean. Basically in the LXVX in this case, having some kind of measurement and making sure that it's not too volatile like crypto markets can be. Alright, so let's go ahead and talk a little bit about a very important thing that I wanted to discuss for cryptocurrency markets over, really, I've talked about it before, but I think it's a very important topic that's been brewing over the past month. There's been a lot of people, across the web, on YouTube specifically, that have had to resort to Patreon over the past years. We use Patreon here on the channel in regards to Data Dash, and I want to talk about the importance of censorship resistance, right? For a long time, not farther back than the topic we're going to be discussing, I was really worried for a while as a YouTuber that I'd be able to continue talking about cryptocurrencies because I was very worried with what Google was doing, what Facebook was doing, with the censorship that they were doing for advertisers. I was worried that they were going to extend that to YouTubers and, to shut down the income operation that I depend on a day-to-day basis to do what I do for you guys, because I do love doing what I do. And there's been a recent topic over the past few months where Patreon has been censoring heavily on a variety of different content creators who might hold different points of view that Patreon doesn't support, taking down people, some of which maybe might hold extreme views, but really bundling in a lot of people who don't really hold extreme views, but possibly views that Patreon disagrees with. And no matter if it's an extreme view, no matter if it's an average everyday view, it is important to understand, not only a very American principle that I stand by, and I'm so blessed to have and grow up in a country that believes in this, but the concept of freedom of speech and freedom of thought and ideas. And Bitcoin is that. Bitcoin allows us to, in a sense, provide monetary support to those ideas that may not be popular, to things that may not get coverage, and even just to support people we like. And again, I think people always try to think of the extremes and sometimes the bad case where that freedom can lead to supporting something bad. But I can tell you in the case of something like this that I saw on Reddit here, this was a tweet from Dave Rubin. He's a political commentator. Again, I'm not here to ask whether or not you support Dave Rubin if you know who he is, but again, he's a very moderate guy. He has people talking about different topics and people from different backgrounds. He's had people in the crypto space. I think he even had Roger Ver on or something, but he's had a ton of different political individuals coming from different viewpoints and just listens to him and talks to him. And Patreon has been removing a lot of people in the space. So him and a variety of others have started to step off the platform, and they've started to now accept donations on their own platform, but predominantly they also accept cryptocurrency donations. And crypto is censorship resistant. No one can censor your transaction. You have every right to send your money to anyone you want on the Bitcoin network. And that's a very beautiful thing. It's very powerful at the same time, but it's a very important thing because there's a few things you don't mess with in life. You don't mess with a man's ego. You don't mess with another man's woman, but you sure as hell don't mess with another man's money. And I think in this case, this is something we need to guarantee. We need to guarantee financial sovereignty and the ability to spend our money as we please in this case, so long as it's not harming anyone, right? To support content creators we believe. And again, I don't mean to beg for your money, guys. You guys already support me enough as is, and we do a sponsorship spot here on the channel. But if you guys do support the channel, whether it be through Patreon or if you're thinking about considering donating, again, there's crypto addresses down below. You guys are welcome to donate in crypto rather than in Patreon and everything. Patreon takes fees and they take all this stupid stuff. They're really kind of a middleman. They don't need to be there. We can do things peer to peer. So anyways, enough rambling on that. Just thought I'd share that. It was an interesting thing to talk about. I want to spend a little bit of time to talk about volatility as well in markets. Now, you all know this has been a topic I've discussed for equity markets for quite some time. And one chart that I really liked here, Bloomberg did about 5 charts here, and you guys can look it up. It's 5 charts on the VIX and volatility and equities. But one chart that I really liked was this one right here. And it's talking about the swings right here in volatility. Now, obviously, we can see over time the swings have been getting larger and larger. And with that, you start to see an expansion of the moving average here. We're starting to get higher highs and higher lows. And again, this goes to signal what I've been talking about in regards to shaping up for a much more shakier market, as we've been talking about volatility with the Ledger X, Bitcoin, Fear Index. It is the same thing for equities here. As we start to see this index make higher points, it's especially the average here, in this case, this pink line, this is signaling that markets are getting on edge. The options that are being traded over the S&P 500 are getting much more volatile. We're getting much more uncertain about the future, right? So again, we want to keep an eye on the VIX here, and it's important to understand that we're seeing a lot of the same patterns that we saw back before 2008 and previous corrections in the past in the VIX, specifically 2008. It's the VIX is not relatively new, but it definitely there's I don't know if there's an exact measurement of the VIX way too long into the past, but in the weekly and the monthly moving averages, we're seeing very similar trends in the VIX to what we saw back in 2008, or stepping up into 2008 actually, which is giving us a warning sign that we might be stepping into a fear-driven market. So again, we'll take a look at volatility just a bit. One thing I was also talking about as well, guys, because I was actually a little bit early to this trend. This was actually, I think one of the first stocks I ever traded was a penny stock. It was a company called Medical Marijuana Incorporated. Bear in mind, I did lose on the trade, but I also had half my money in another trade when I was young. It was just a few $100, and I actually made up for my losses in a solar investment. But I just wanted to ask you guys if you all would like me to cover cannabis markets. I know this is something that a lot of people get interested in. A lot of people out in the space who've obviously speculated on crypto want to speculate on the cannabis space. And as someone like myself, for example, who has believed that this market has been around the cusp for a little while, and it is going to be a sector in the United States. It doesn't matter if you support it or not. It's going to be a thing. That being realized, I want to spend some time, maybe talking about this market if you guys are interested. I think for a while this market is going to be going into a decline. It's going to be pushing sideways as much as I think it's expanding and doing well in Canada. But I was just curious if you guys would like me to maybe spend some time on every daily update, 30 seconds to a minute, really just talking about this and going over some of the indices that we have and some of the data points, and maybe even talking about a specific stock or two. But just wanted to check with you guys more than anything at the moment. For this daily update, I'll just let you all know my major target is really to see this over the next few months starting to base out around this same level of 50 to 60 points on the index here, right? It's a good good correction point from the highs here that we saw back in January of 2018. And we definitely need a good amount of time, like Bitcoin, for example, to base out and hold the support level for some time. Right? So that's what I'm watching for, but we can talk a little bit more about it later on if you guys would like in future daily updates. Just trying to cover a broad range of markets in this case. So let's go ahead. We'll take a look at the NASDAQ here. NASDAQ right now at the moment, current trading hour, it's 8:15, so we haven't seen the market come up just yet. I'm on Eastern Standard Time, so the market's open up at 9:30. But right now, at the moment, one thing I'm noticing is that we did get above the 50-day here, right? Very similar to over here. It's going to be a question as to whether or not we can hold. One thing I'm really looking for here is that to watch, the thing I'd say to watch is the RSI. Now you can see I have a line indicated here how the RSI on the NASDAQ has been making higher levels here. You're getting an interesting divergence here. You're getting higher levels on the RSI, and in this case, price, which is every time visiting lower lows as well. And the VIX is getting the RSI as well as making lower lows. So we're getting this bigger spread in price movements, right? And we've been getting bigger rallies and bigger sell-offs. So the thing I'm watching for is as the RSI approaches the 60-point level, I'm also looking to see if the NASDAQ is going to come anywhere close to these highs, because if it doesn't get above these highs in this line of descending resistance, okay, this is giving the NASDAQ a little bit of help here. If it can't get above this descending line of resistance or anywhere close to that line of resistance, this is going to signal that markets are too weak to continue moving forward. Another level I'd watch for is here at 7,200 on the NASDAQ. You can see this was the last point of resistance. It was resistance over here as well. And these levels are very important to watch. So this whole range here, look, guys, if you've been trading this, if you've been trading on the Russell or the NASDAQ or just picking up some of your favorite tech plays, congrats, you've made some great returns here. And of course, you're going to have a lot of these types of rebounds in markets as fear starts to settle in. I mean, take a look at any previous downtrend in the market. I'll go ahead and remove the RSI line here. But going on, we can see here that we have pretty sharp sell-offs, and then we have a good few months of recollection in price. Markets try to test up back to the highs, and then they roll back over. Right? This is 2016. Take a look back all the way in 2018. Right? Coming down to some of the larger weekly and monthly moving averages, we try to test higher, lower high. Try to test higher, lower high, and then you get the decline in markets as you start to wedge in with price here. Right? Not too complex, but this is a very common sign of a topping market where you're starting to set lower highs. If we can't retest to the highs here, and in fact, if we are making lower highs than what we saw over here, we might have had 4 great weeks of price action, but that can change on a dime very quickly. Very, very quickly, guys. It's very important to realize that, especially now that the RSI is not oversold on the weekly, right? On the daily here, I think we're quite over. Yeah, we're getting close to. We're not overbought just yet, but I think if you get another update or two, you'll be close to the overbought range. So, anyways, outside of that, let's go ahead and take a look over a few other major things. I want to take a look over gold and silver real quick. Gold and silver still holding up high, not making any serious moves. Again, I'll show you guys with silver as well. Since we last talked about it, still pushing sideways. Silver looks more than anything like it's going to come down to the 200-day. So I'm not making any positions until then, but I actually might try to play a rebound play off that if it holds nicely. And not too far away, a good 20-cent drop here for silver in this case, or 23-cent drop. Again, silver markets, the major thing I'll usually do is if I'm trading in the short term, I'll usually play one of the double or triple leverage plays that are available where you can paper trade silver. But again, for the long term though, I'm still hoping to pick up some physical commodities in that case, but not too eager at the moment until we start seeing a much larger cycle. Outside of that though, let's go ahead and take a look at some of our major indexes. We're going to take a look at the home builders here. Home builders, got to give credit, up above the 100-day here, and potentially looking to make support off of previous resistance after it's been broken. So you want to see this come down and hold on here, and if you can, home builders might actually be in for a little bit of a short-term rebound. Not too bad, not too shabby, especially after breaking down below these lows here. Very impressive stuff, but it is overbought. Be careful on that. Watch the RSI. Outside of that, let's go ahead and talk about XLF, the financials. Financials right now are starting to rally up. One thing I look for here is we start to open in regards to the market. See if you can get above this level here, right? See if you can get really above and close. Right now, actually, it looks like it's saying XLF is trading, but the market isn't trading. That's weird. Anyways, yeah, if you can see XLF, maybe this is pre-market. That'd be cool if they actually start showing that on TradingView. But if you see XLF hold here and close above it and get above that 50-day, I think you're probably testing in for one of the other moving averages, like the 100-day or 200-day. But I'd be interested. Watch to see if it breaks out above there. If it doesn't, it's going to roll over. So again, the stars are aligning here. Previous support might turn resistance, not to mention you got the 50-day weighing it down, which weighed it down both times over here. So important things to watch. Again, not complicated, guys. No crazy indicators are being used. It's just simply looking at the things that really determine market momentum, the things that determine what direction the market's going to take. A lot of it has to do with support and resistance and very simple indicators like the RSI and the moving average. So they'll give you a decent gauge as to where things are going. Alright, so that's it for the update, everyone. Thank you all so much for watching. As you all know, I've rambled on enough today, but if there's anything that I did miss, please leave it down in the comments down below and get a discussion going. Always love hearing from you guys. But until the next video, thank you all so much for watching, and I'll see you all in the next one. Stay tuned.